In general, the situation has barely changed since yesterday. Both tried to pay losses incurred the day before but failed. Major sellers slipped back into the market. As a result, the euro dipped to one-year lows. Meanwhile, the British pound was weighed down by the outcome of the Bank of England meeting. The UK regulator decided to raise interest rates by 75 basis points to 2.25% and stick to its aggressive policy tightening path. Against this background, the pound sterling trimmed early gains and returned to the area of 1.1200. Now let's take a look at today's macroeconomic calendar. It includes data on services and manufacturing activity in the euro area and its member states. The indicators are forecast to decline, which signals the European economy is sliding into recession. This means that the European Central Bank's further aggressive policy tightening will hardly bear fruit. Economic growth in the region will keep slowing, which is confirmed by analyst projections. Britain is also set to release downbeat PMI data, although the UK Services Purchasing Managers Index may well remain above 50. The situation in the United States is better, although the survey is expected to show factory and services activity slowing amid interest rate hikes. If the readings meet expectations, this will be a bad omen for the US economy. Besides, traders may take notice of Fed Chair Jerome Powell's speech. However, it will hardly have an impact on market sentiment and he is unlikely to say anything new. Thus, the regulator will continue to act aggressively and the euro and the British pound will keep losing ground against the greenback. From a technical point of view, the 1-hour Euro-American dollar chart shows that it is worth focusing on the one-year low of 0.9813. A third successive test of this level will most likely lead to a drop to a fresh low. Then its false breakout will return the pair to 0.9813. In this case, it will be possible to go long counting on a breakout of 0.9853. If the price tests this mark from the top down, an additional buy signal will be generated. Thus, the euro will advance to 0.9898, where traders will be able to go short amid a false breakout. Short positions on rebound will be relevant at 0.9952 with a view to catching an intraday correction of 30 to 35 pips. Alternatively, bears may keep control of the pair. If the price forms a false breakout at 0.9853 following data on services activity in the euro area, fixes below 0.9813 and tests this level from the bottom up, it will be a wise decision to add short positions. In this situation, the euro is expected to slide to 0.9770 and 0.9723. At the level of 0.9723, I recommend buying the pair on rebound, counting on intraday correction of 25-30 pips. A long position at 0.9770 can be considered only in the event of a false breakout, as counter-trend trading is too risky. Speaking of the British currency, the situation is similar. If UK PMI data is upbeat, a false breakout at 1.1215 will create a strong buy signal, thus pushing the price to 1.1268. If the price breaks through, consolidates above and tests this level from the top down, the pound sterling will have a chance of recouping losses and rebounding to 1.1314 and probably 1.1361. At the mark of 1.1361, it will be possible to go short on a rebound with a view to catching an intraday correction of 25-30 pips. At the levels of 1.1314 and 1.1268, long positions can be considered only amid a false breakout following downbeat statistics from the UK. If the price fixes below 1.1215 and tests it from the bottom up, the British pound will come under stronger pressure, heading for 1.1168 and then 1.1113. At the level of 1.1113, I recommend going long on a rebound. Long positions at 1.1168 will be relevant only in the event of a false breakout. Best of luck and have a nice weekend.